gentlemen, thank you very, very much for joining us here today at a physical event. It's a great pleasure to actually see everyone in person. Congratulations to the organizing team, to Ashwini, and for everyone at TIE for putting this together. I'm missing my co-chairs from last year, Karan Mola and Sujita Salvan. We put together a pandemic-proofed India Internet Day last year, but it was unfortunately virtual. It would have been nice to be able to see everybody, but I'm glad that we could do this today. Let me call on stage my fellow panelists. You can see them up on screen, but we're going to get them onto stage as well. Deep, can we have you join us on stage? Of course, the godfather, the gangster of the Indian internet world, Mohit Bhatnagar, Managing Director at Sequoia. Mohit, can we have you up on stage? And Mukul Arora, the co-managing partner at Elevation Capital. Gentlemen. Perfect. You want me to sit in the middle? Okay, cool. No, it's fine. No, it's perfect. So I think the stage has been set. Kalyan has put together all the data for you. It was a sobering sort of start of the morning. We've also had our co-chairs take us through what the reality at this point in time looks like. Today we are here to discuss the state of the ecosystem, the good, bad, and the ugly, so to speak. And let's get started with exactly that. I'm hoping that this panel here is going to keep it as real as possible. We don't want to get bogged down by too much by way of data, because I think that's going to be put forward on every panel that you are going to witness here this morning. But the signs are very, very clear. If 2021 was a record-breaking year in many ways, then this year is going to be a sobering year. We don't know how long this winter is going to last, how severe this winter is going to be, but these are tough times, and startups are going to have to negotiate their way through the turbulence and through the volatility. There are many unanswered questions at this point in time, and I think, I was messaging a friend as I was sitting there behind Mohit, and he said, what are you doing? And I said, I'm at the India Internet Day, and he sent me this forward which said that there was an art exhibition on, and a first-time exhibitor was showing his work, and there was a acclaimed art critic in the audience, and he asked the young artist, he said, would you like my opinion on your work? And he said, yeah, sure, please go ahead. And he said, well, it's worthless. But he said, yeah, but share it anyway. So with that sobering thought, let me get started. And Deep, let's start with you. We've got the data in terms of what happened through 2021, and which is why the topic of choice for the India Internet Day last year was escape from velocity. And this time, of course, it is riding the wave. But between 2021 and 2022, there have been significant changes, more global than domestic. As you look at what's happening around you today, what are you most worried about? What are you most concerned about? Let's start with the bad.
Can I start with the trivial?
You can start with whatever you like.
Okay, one of the very significant changes which happened on this panel over the last couple of years is that Shereen moved from a BlackBerry phone to a full-on smartphone. So things are happening. The internet is really...
I finally gave it up like last year, yes.
Yeah.
Yes.
So if someone's been living under a rock, it's probably Shereen. I don't know how she does what she does. But more seriously, I think Ashwini called it right. It's more riding the storm or in the face of the storm than it is a wave, for sure, and that's what this topic is here. I think first everyone should know that what's happening in India is not India-specific alone. I think Kalyan, if you were paying attention to his slides, called it out really well, where he said that there's a problem in the macro. In the global economy, there's a slowdown, firstly. That was clear, right across. All the estimates have fallen from 3 to 4% down to like 2 to 3%. So big drop in the growth overall. There is, there's real inflation everywhere. I think if you read about inflation right now everywhere, and most of it is, I think, because of monetary policies, which is happening, but also supply shock with the war. And that's hurting everyone. You read the headlines, what's happening in Europe, and people are just talking about galloping prices for energy and gas. So it's playing out completely like the cascading effect. So I am worried that if we don't come out of this fast enough, I think 2024, then I think we have a real problem. And I'll tell you why. So the way I like to slice this is early stage, the good news. I really think that's the good news, good, bad, ugly. So that's definitely the good news. I don't think anyone gets impacted in India in early stage in a big way. And both my co-panelists out here know much more about this, but let me stick my neck out. Simply because I think early stage funds are fairly committed towards India. Those funds have been raised. They are for India. They should happen, right? That's good news. I think growth capital is going to be a much bigger challenge because that, I think, I call it fungible capital. I don't think it's dedicated for India. It can move quite easily here or there. And then obviously what's happening in the markets, you need more time. You have to push it out. Our chairs called it out. Like how does, like Mayank said, how many months more can I take? How much do I have? So I think people have probably, good companies have enough for maybe 18 months, 24 months, some prudent companies, a lot of them between 12 to 18. And if they don't manage their finances well, which will mean cut down on growth, and we don't get out of this cycle by 2024, I think, pardon my French, but the shit is going to hit the fan. Yeah. So.
Well, let's hope the shit doesn't hit the fan, and let's hope that we don't see a winter that takes us all the way to 2024. But to the point that Deep is making, Mohit, and let's address that issue. And I think the good news is, and that is the silver lining, that early stage capital continues to come in, and that is good news for people sitting in this room who are getting started. But on growth capital, it's not just the macros, but it's also the fact that funds themselves are struggling. Whether you look at what's happening with SoftBank or you look at what's happening with Tiger, when you see that kind of reset, it's not a recalibration by any standards, it is a reset. When you see that kind of a reset, what will it mean? What will the implications and the impact be?
So hi everyone, good morning. Shereen, I think I disagree with Deep, just to put it out there. I feel like all of this should be looked at relative to the rest of the world.
Yeah.
And when you start looking at a relative picture of India versus the rest of the world, we come out looking much better in any downturn. And you look at this year itself. First 6 months, we had close to $20 to $30 billion of late-stage capital that left the country. And in August itself, we had 3 weeks where close to $5 or $6 billion came in. I actually think the tide is turning. I actually think the world has got enough capital. They're going to be looking for places to deploy it. It's going to be going to a few places. It's going to be going to the places that can return and have long-term return potential. And I think India shines out in that. There's not a single company out there in the world who's not trying to diversify away from its dependence on China. Global supply chains are getting reimagined. Phenomenal opportunity for India across every category. Is it easy? No. Is it going to take a lot of capital? Yes. Is it going to take a lot of great entrepreneurs to build high quality products? Yes, yes, and yes. The path's not easy, but I think the world is looking to see us succeed. The world is going to provide the capital. That's the easiest part. The hard part is getting it done.
Yeah, that is always the hard part. And yes, to be fair, we have seen a significant amount of capital. I mean, we had on Friday, on the FII side, a buy number to the tune of almost 5,000 crores. So I get what you're saying. And hopefully we're going to see strategic money continue to come in as well. Are you somewhere in the middle, Mukul?
So, Shereen, I think obviously since morning we have heard, if anyone had any doubt, are we in middle of a doom and gloom? Kalyan made it very clear. He's taken all doubts away. Having said that, I do want us to step back and see what has happened over the last 10 years. Because sometimes in these periods, it's very easy to get lost in the noise and lose out on the big picture. And if you look at last 10 years, right, 2012 versus 2022, 2012, we were at 100 million internet users. Today, we are at 6x of that. 2012, we were at 2 billion e-commerce market. Today, we are at 30x of that. It's 60 billion. 2012, I don't think any of us expected that SaaS coming out of India would become so large. We were all bullish on the India consumption story. So SaaS total revenue out of India was less than 50 million. Today, it is $4 billion. So if we look at where we have come in the last 10 years, I think all of us should take a moment to acknowledge what we have achieved and the trajectory that we are on. I don't think we should lose sight of that picture. And therefore, if you look at that trajectory, I think next 10 years, things will only get better because we are probably the only geography where the tech penetration has happened ahead of consumption growth. So we are still at a 2,500 per capita income that will go to 5,000 over the next 8, 10, 12 years. And if you look at US versus China, China had economic growth and tech growth together. So therefore, the tech economy was larger. In India, economic growth will come after tech penetration has happened. So therefore, the tech economy is going to be even larger. So if I look at 10 years out, we are going to be so much stronger given all the fundamentals in place. So, no, I'm not in the middle. I'm firmly in Mohit's camp.
You are very firmly in Mohit's camp, and I think that you know, I appreciate the fact that you've given us that 10-year perspective as well, because it is important to note. And we have seen significant changes. We've seen some of the enabling, you know, drivers that you spoke of, which have come together to ensure that this ecosystem actually is much more robust than it was a decade ago. But let's just continue to build on that aspect. And there is absolutely no doubt, and I heard you speak as well, that this move towards digitization, this move towards the internet, etc., is irreversible. The question is, you know, are we going to go through that kind of peak that we saw through COVID, or are we going to see some degree of normalization happen, which we're starting to see at this point in time? But the assumption, as Mukul and Mohit both said, is that India is poised to grow, whether it is 6.5% or 7%, we can quibble and argue about it, and the internet is going to continue to be the big growth driver. So in that sense, it is advantage India today, wouldn't it be?
Yeah, so I really don't want this to be like a TV debate, and I don't think you normally do this, Shereen. So I don't know where I said that India won't do better than the world. Like, so thank you for putting that spin on it. Of course, there's no doubt. I mean, look at what the McKinsey CEO today has said. He says, why next decade belongs to India, next century? Yeah. And my repartee is, of course, aap ho gaye wahan kya 100 saal baad kind of thing. But no, of course, I mean, come on, our demographics are all, I mean, we are in the sweet spot, and you called it. Yeah. There's no question that we will gain. My point was what I'm scared of. You asked me what am I worried about.
I agree.
And I am worried about that. I have to be honest with everyone out here. Like, you know, don't take capital as though every 12 to 18 months I'll be able to raise the next round. Yeah. Don't. That's my frank and very candid advice to young entrepreneurs. I tell anyone who I meet right now, be really mindful of the capital you're getting right now. Build a bigger cushion, and you know, this winter might be longer. So, see, I think it's very easy also sometimes to say, and I want to, you know, I'm happy to be on the other side with my two friends here, all of you maybe. It's very easy to say and take an approach saying, we are better than the rest. Sabki lagi hui hai, but we are better than everyone else. Meaning, that's like, I don't think that's a very smart thing to do, honestly. Because there are other places which demand capital too. So the capital could easily flock to industrials, I mean, I'm not saying India growth will come down. The point is, will our audience out here, which our focus audience is entrepreneurs, particularly young entrepreneurs or early stage entrepreneurs, will they have a comfy ride for the next few years? I think it's going to stay bumpy. That's my fundamental point.
No, without a doubt, yeah.
But, and therefore, you know, we should not just rely on it that it's going to be easy sailing, is my point. Demographic, of course we'll win. Who can even debate that today? But what Mohit has called out is a great point, that we have not capitalized on what we should have with China going through their tough times right now. We just haven't. And will we? I don't know, honestly. I mean, I'm not that bullish about us suddenly getting our act together. Some of these things have happened. And like in IT in India happened despite the government. I can't say that for the internet. I don't think we give enough credit for what we've got, the UPI stack, the India stack. And I think that, you know, I think Kalyan really put out a good slide. It's incredible what we have in India. We all travel, we all know what's happening in other parts of the world, and everyone else is backward when it comes to payments. The US, I mean, the US gets so excited about Venmo, but Venmo you can only do if two people have a Venmo account or Zelle or whatever. In India, we're like, I mean, we all know how we pay for Pani Puri now, I mean, everything has changed and we take it for granted. We are so advanced on the stack. So I think there's some things we are doing very well. Will it all come together? I sure hope so. I don't know.
Yeah, and that's a fact. We don't really know. But to your point on UPI, today, in fact, for the month of August, we've touched a new record high as far as UPI transactions are concerned. But we need to be mindful.
Shereen, do you use UPI?
No. Okay. I don't. But you know me. I'm not the. Hopefully. No, but you know, to Deep's point, I think we need to be mindful of the fact that we cannot take for granted that capital is going to come our way. We cannot take for granted that growth is going to necessarily deliver on the 7.5, 8% aspiration that we have for it. We need to ensure that lots of pieces come together. But let's talk about the regulatory environment, and let me start by asking you, Mukul, what you make of it at this point in time. There's a lot happening, not just in India, but globally as well. We've seen the crackdown in China, even in India at this point in time, whether it is gaming or education, the government is saying, look, we don't know if self-regulation is going to work necessarily. We might want to intervene. We've seen what's happened with crypto. The taxes come in. There is still uncertainty on what the law eventually will say. Will there be one or not? So on balance, when we're talking about the State of the Union from a regulatory perspective, what do you make of it?
So, couple of thoughts there. First, I would 100% agree with Deep on the overall role that government has played. And I was in a room with our Honorable Prime Minister last year. I haven't, like, the happiest he was when someone called him the startup Prime Minister. So he genuinely feels about that cause. And that shows up in the government's action. Having said that, overall, as you know better than anyone else, our government's focus has always been on protecting consumers' interest ahead of everything else. And therefore, even our financial services, our regulation have been the most stringent at times, but that has helped us well through the cycle. So there are times when it feels like, hey, why are we holding ourselves back? Yeah. But then when the whole world blows up, we thank the RBI that thank God you were so strict. And I think that's what the government is again doing. Wherever they do feel consumer interests are not being taken care of, they are stepping in. Is it always the right answer? It's always find a happy medium. But I think overall, given how early we are in some of these journeys, consumer interest has to be taken care of. That cannot be let go, because in the long run, capital cycles will come and go. But if the customer experience gets lost, if people lose hope or belief in technology, that's the worst that can happen. So therefore, I think overall, our regulation has done a good job of finding that right balance. And from an overall government perspective, they have been very, very supportive.
Okay, so you believe that there is a balance there. We're anecdotally hearing about this flight of Indian entrepreneurs, especially as far as the Web3 and the crypto space is concerned, out of India to other jurisdictions as well. Do you believe that this is a trend that we should be watchful of, passed through the anecdotes and the data, what you're hearing?
No, I don't think so. I think if there's one big win we've all seen over the last 10 years is, remember we used to talk about this thing called the brain drain and how all our IIT bright minds used to end up in the US and the MNCs. That's completely shifted, as you know. I think it is a desired outcome for the best people, the best students, the best entrepreneurs to sort of create businesses in here, because the growth's here, the future is here, and there's more dislocation and opportunity in all the mess and chaos that we have around us as well. So I don't see that as a big flight of great entrepreneurs. As far as the crypto thing, yes, there will be some countries who will try and be opportunistic and will try and use this opportunity to make it easier for people to build businesses in there. I think our Indian government, like Mukul said, is very mature and very balanced in the way they do it. Unlike many others who just come out with outright bans. I think these folks, they provide the right guidance, the right bites.
Well, they almost went there and then pulled back.
To your point, but they almost went there and they pulled back to the point where they're still dampening the enthusiasm so that the end consumer doesn't get hurt, but they're going to allow it to sort of, bubble up, allow it to sort of bake, allow it to see what it becomes before you actually take a hard policy against something like that. So I think it's a balanced policy. It's hard. None of us really know where crypto is going in the next 5 years. Why would you expect the bureaucrats or the government to have the most insightful, thoughtful perspective on it? They're just being balanced about it to see, put in some frameworks, some guidelines, allow folks to experiment, innovate, but, make sure that they don't cross lines that hurt people.
Yeah, I agree with you. And speaking of maturity and speaking of hurting people, Deep, let me address the issue, which I think is an important issue to address. There was a lot of euphoria when we saw new listings from the Indian internet space, from the Indian entrepreneurial space head to Dalal Street. And there is a crisis of confidence at this point in time. Two questions. Do you believe that the Indian market, the Indian retail investor, is ready for loss-making companies to go public? And B, what are the lessons to be learned in the light of the experience that we have? How much has this hurt sentiment? Are we going through a crisis of confidence?
The short answer to the first question is no. I don't think the Indian consumer is ready for that. No consumer in the world, in the market, is ready for a dip, which is in a period of months, a few quarters after listing, 40, 50, 60%. But it has happened. But it's also happened in the West.
Yes.
So that was my point. It's not unique to India. It's just that we're not ready for it. We don't, I think, have the appetite for growth companies alone. We are a PE-focused market. let's face it, I have gone here and, we're not listed here. We'd like to list here and we are thinking about it. It's not something that we don't want to do, but when we listed in 2010, the Indian market wasn't ready for an internet stock, definitely not for an e-commerce stock, which is clear even today. One is the ups and downs. B is when I go and meet analysts in Bombay, I meet investors in Bombay, and I ask them, they are actually still very focused on EPS, very focused on PE, which works for us today, but I can't blame these companies either. Now, someone, in hindsight, which is 2020, someone guided / misguided some of them to say, you're ready to go out. I don't think they were all ready to go out clearly. Ready to go out means, do you have a very predictable business model first? You're not profit making today, but are you going to be profit making in, like, I can see it, like 2 years, not 3, 4, 5 years. Like I'm saying actually 1 to 2 year kind of story. That's the Indian market today. It will change. The pools of capital very often are the same, right? So the origin of the pools of capital. So it will change over time. But this sobering has come not only because of India. This sobering has come because of, I think there's an international impact. We're also coming out of it. You're also seeing some very good stocks which are managing to ride this. Why? Because you look at their business model. The business model fundamentally is more stable. People can predict revenues. The market really likes to see, comfortable, solid predictions which they can rely on. That's what they want. They don't like choppiness. So managing retail investor is entirely different from managing private investors. I mean, I've been there. We've been in that journey. We've had investors. It's a board. Most of your investors, if they have more than 10% stake, will have a seat on the board. You'll have discussions and you'll say, yeah, okay, we are consciously going ahead for the next 8 quarters. We will keep making losses. We need this much capital. We have this much. Let's raise more. We'll come out of it. That takes maybe, a few weeks and one board meeting, and it gets done, and you go ahead and you start executing on that, and then things change. But you convene formally once a quarter, informally maybe once a week if things are really crazy, or once a month, solid. You convene but with the retail market, you don't get that opportunity to explain. You get the opportunity once a quarter to explain what's happened, what's gone wrong. Neither do you have the time, neither do they. And they will not get into like, why did this happen and all. It doesn't happen that way. You report and that's your earnings. So I think we're still very early. This is a good learning, I think, for everyone. And what kind of companies should go out and when you should go out, I think.
Yeah, so it may not necessarily be a bad thing. The headlines today are about who has decided to pull out, who has decided to hold, who's decided to pause. But to Deep's point, given the market conditions, given the maturity of the market, as well as given the maturity of business models that are attempting to go public, do you believe it may not necessarily be a bad thing to take a pause?
Yeah, I think it's a journey, Shereen, isn't it? I'm going to just, I came across the women's basketball coach at Duke, pumping up her players last week. It was there on YouTube. And she says, we got to get better at heart. And the point she's making is, it's not going to get easier. If you think, you're going to become a better basketball player by, it's going to get easier, it's not. You think once you finish Duke and you go to the real world, it's going to get easier, it's not. And the point she was making is what's going to get better is you being able to deal with the tough times. And that was an interesting learning for me is, why should we expect the market to suddenly have a lot of capital or for it to become easier to go public or for companies to be able to naturally get a larger market for their, for their product or service. I think what's really happening is through this whole IPO experience you talked about, our companies are hardening. They're learning how to deal with a whole set of new constituents, which are the public market investors, the retail investors. To be fair, many of these next set of entrepreneurs are now looking at these folks and saying, okay, you went public, you opened that door for me, now I'm going to show you how to go public and do it even better. So I think it's a journey here in India, and we should never forget the fact that we're making that progress. And to me, it's a very positive thing.
Yeah, it is a journey in many ways, but Mukul, one of the issues that I want to discuss with you, and I think there's again been a lot of debate around this issue as well, and we've seen it happen every time we go from a wave to a trough, and no surprises that the conversation is restarted. But spending the money that you have on buying all kinds of things that you may not necessarily need. And I don't know how many of you are Top Gun fans, but you're writing checks that your money can't afford, that your body can't afford to write. And perhaps that is something that founders, entrepreneurs, as well as investors need to focus much more closely on, given the fact that we are going to see liquidity dry up, at least in the near term. How much of that is going to lead to a reset in the market as we see it today?
So, see, I think there are merits to both parts of the market. There are merits to the waves and there are merits to the troughs. And just before sort of answering your exact question, the only thing I would add to the previous discussion also is on IPOs. See, the crux of the question, which links back to this also, is are these companies generating cash or not? And I think this trough is a great opportunity for most of the scaled up companies to prove that. And if we look at the first COVID wave, 2020, when all of us were locked up at home, businesses were shut, we saw so many companies go hard after their cost structures and come out looking completely different.
Yeah.
If you look at all vertical e-commerce players, all of them were loss-making pre that, all of them have been consistently profit-making post that first COVID wave. So therefore, I think now this is a great opportunity to say that, okay, let us, one, test all of our assumptions. We believed Indian consumers don't pay for convenience. Have we really tested that? We believe we need to spend X amount on marketing. I think everyone has realized that X is not X, it's maybe 0.5X, maybe it's 0.2X. So let us test all our assumptions, use this period. And the good news is most of the scaled up companies have raised enough and more capital so that if they are prudent, they have at least 2 years. Many of them have 3 to 4 years of runway. So how do you use this phase to conclusively answer that these companies will create value for the consumers and they will generate cash? If that is happening, IPOs will happen. We'll have successful IPOs. All of that will follow. But next 2-3 years, that's the point Deep was also making in the beginning. We have to capitalize on this window and answer these questions conclusively.
So just to take that point forward, because I think it's very clear and it's been evident right through the course of the pandemic. It has never been easier to start up in India, but it is getting increasingly difficult to scale up in India, at least in some categories, in some sectors. Many of these segments are now getting increasingly competitive and in some cases even commoditized. How challenging is the scaling up part going to get now?
So the interesting part is that actually scaling up is much easier in these phases versus what we were in earlier. And I'll give you a couple of quick examples, right? If you look at 2015, when again we saw mini wave, there was a lot of capital coming into hyper-local businesses, even though it felt like if you are starting a food delivery company or if you're starting a local services company, it's very easy to raise capital. The challenge is 20 companies will raise capital and then only one will scale. So that first round is easy, but then it becomes super hard versus if I look at one of our portfolio companies, Spinny, which is in the used car space. They were building used car business in 2016 when everyone thought that category has already finished. There were clear leaders. There was no room left. So there was no competition. They were quietly building. 2018, they raised their first round of capital. Today, everyone is trying to copy Spinny. So the beauty is in these phases, it's so much easier to scale up because your CACs are lower. It's easier to hire people. You have much lesser competition, but it takes more effort because you know that the start will be harder, but after that it will be much easier.
Okay, but Deep, I want to address that issue, growth at any cost, and that perhaps, in the good times, it's the bet that you want to make, but when the money is hard to get by, it's going to get increasingly harder, and we've seen this. I've seen this through the 2008 phase where large listed conglomerates bought all kinds of things that they shouldn't have bought to start with and then paid the price for it later, and we're perhaps seeing this happen even in the startup space today. And what are the lessons and what do you believe that founders should be careful of?
Yeah, I think growth at any cost is a phrase which I can't say will never be said again or never be kosher again.
But it'll still be different. It'll still be different.
It'll be different. Yeah. And who knows if that's going to be Web3. I don't understand Web3 at all. Yeah. But clearly we're going to learn about Web3 today. We learned about it yesterday in Bangalore. And I think it'll come back in a different way. It's not like, but right now it's not a nice thing to say, right? No one is saying that. I don't think there's any VC telling any of their founders this today. I mean, that would be amazing if there's actually a maverick out there who's saying, listen, I'm going to go against the tide. I don't care. I'm giving you this money. I don't think it's happening. And which is the right thing. We learned a lot, Mukul. You're absolutely right. If I can just kind of really extend the point and give you an example of my own business, which is online travel. So we dipped in revenues our first quarter of the pandemic, which was April, May, June. Our dip was 95.5%. And we're public. So you go out and you report that, and the market does not have a sense of humor. So when you say this is a lack of earnings call, they don't like it at all. But here's the lesson we learned. We started fixing costs, et cetera, et cetera. The next quarter, we were still in the red. After that, we've had 6 positive quarters of operating cash. We had no choice. Yeah. Our back was put towards the wall, and that is what it teaches us. So you're absolutely right, Mukul, and you alluded to that too, Mohit, that when you're pushed towards the wall, you will come up with solutions you never thought possible. And it's not only marketing spend, it's also how many people you throw at various things. Yeah. Kalyan mentioned their science projects are now going to get cut. I don't know right or wrong, but fundamentally what he's saying is we're not going to take wild swings for a while. Again, right or wrong, who knows? Because those wild swings probably got you there, and maybe if you stop taking them, that's not a good thing. But definitely you are going to get far more mindful about every dollar you spend, as you should. It was never meant to be free capital or cheap capital. Young founders, again, if you don't know it, equity capital is the most expensive capital. Yeah. It's probably 40, 50%, whatever. It's not cheap capital. It's the most expensive, as you'll realize later. Right now, it seems like the cheapest, and plus it makes more sense because you won't get debt right now. But it's damn expensive. So we have to now be very conscious about where we use it. It's a good thing. It is boys from men. It is undoubtedly a separation that's going to happen, or ladies from girls, which is the right term to use now, even though we don't have a lady founder out here.
Yeah, not a founder, but yes.
I read your mind. So before that, but you gave me that look. But it's true. It is going to be it's going to be a time where I think early stage, many get funded, and then the shaft from the grain very, very quickly. You're going to get the solid companies who are able to grow despite this tough time, and that's what we all want. That's real business. So it's actually getting closer to real business. So that's it.
And as you point out, that is the way forward, and that is the good way forward. But Mohit, one of the other things that we want to address also is the governance issue, or the lack of. And I think that, again, to Mukul's point, that very often you get caught up in the headlines and you will see one case or a multiple of cases and assume that that is symptomatic of the ecosystem, when it not necessarily is the case. But what should founders at this point in time be mindful of, especially as we ride out this storm on the governance front?
Yeah, I think it's one more example of how we're all maturing as an ecosystem, and it's an important journey, and it's an important lesson for all of us. I think it's also it's a very good question for investors, founders, and other folks in the startup ecosystem to grapple with and come to something that everybody aligns with. What is the right level of governance at a seed company? What's the right level of governance at a Series A company, the Series B company, or someone that's getting ready to go public? Is it the right time to bring in an audit committee at your seed and Series A? Is it right to start adding independent board members? So there's a right time and a right place, and your ability, by the way, to attract the right kind of independent directors given your scale of company. So not an easy answer for the average founder to say, hey, I want to be well-governed, which means I want to have the best independence, I want to have the right committees. Easier said than done.
No, but are investors changing their approach to this?
I think any investor would love to see a high level of governance so he can sleep well at night, or she can sleep well at night, right? I mean, at the heart of it, the company is being run on a daily basis by the management team. You come in as an investor through your MIS, through your annual audits, through your quarterly board meetings, and there are these lenses into the company. But you very much are depending and hoping that there is a self-governance in the company. There's a whistleblower policy that if there is bad actors, they're getting weeded out of the system very much earlier. So it would make nothing but complete sense for an investor and the founder, by the way, who has an even tougher job, to make sure that when he's governing a team of, call it 2,000 people, everyone is running the ship the way he would, with high degree of integrity. I mean, that's easier said than done. So I don't think founders and investors are at odds on this. It's really, as an ecosystem, both wanting a higher level of governance. And I'll end with this, and this is more of an Indian psyche that I think we should all be very careful of. Think of the last time you were driving a little quicker than you should be on the roads, and a policeman stopped you. And a policeman said, you're speeding. an average person out there gets upset. Like, why are you catching me because I'm speeding? Can't you say everybody else is speeding? That's not cool. That's not okay. If you cross a line, it doesn't matter who else has been not caught yet. It is really important not to cross that line. And so I think this mentality of making sure that my shop, my company, my firm is well governed is an incredibly important thing for each one of us to organically build out. And only if each one of us do it, will it happen as a whole.
Are we seeing aberrations, or are we actually seeing a large collective speeding beyond the speed limit at this point in time, Mukul? How worried are you?
So, see, overall, it's definitely an aberration, there is no doubt. And if you see historically, forget tech, if in any sector there is lot of flow of capital, there will be these aberrations, whether it was infrastructure, whether it was financial services in US, whether it is tech in India. So I think that is definitely an aberration, there is no doubt. And I think it's again very important to find that right zone. You don't want to straddle early stage companies, because that is when they need that velocity, they need that freedom so that they can iterate and get to the right answers. Having said that, one thing we can do differently as an ecosystem is, in a lot of these cases, there is smoke much before there is fire. So can you then at least up the governance when there is smoke before they become too big? Because then if these aberrations become too big, that is detrimental to the entire ecosystem. So I think that is a big learning from this cycle, and that hopefully changes. But it is clearly an aberration. There is no doubt.
So have the smoke alarms in place, and hopefully we're getting to that point. Let's talk about the opportunities, Deep. And you know, if through the pandemic it was ed tech and health tech, and today we're talking about drones and Web3 and so on and so forth. What are you most confident about? Which are the sectors that you're looking at closely that could sort of open the doors for the next sort of category beaters?
Well, as a company, we think there's a lot of work still to be done in travel, so we're quite happy to stick there. Individually, I don't think I seek out that much personally now. I'm happy to go through funds. But what I'm very bullish on is actually the same old sectors but going deeper. So I think the tertiary, not just the secondary and the tertiary. Met a young entrepreneur today who I know well. He's on probably his second or third startup. He's saying medical tourism is back with a bang. So I said, wow, that's interesting, and we'd love to understand it. That's because it's tourism. But yesterday or day before, I do try to meet a lot of young entrepreneurs. It's just very, I think, A, it's part of the Thai ethos.
Yeah.
B, it's very interesting to know what's going on. And it's amazing how people are finding tiny businesses, like this whole thing about social. So really, really young entrepreneur who I didn't think, really had those chops. But two of these guys have already figured out a way of how they can acquire customers so cheaply through influencers. So they're talking about the mid-level influencers, not the high level, not the, somewhere the mid-level. The high level have their own almost brand following.
Yeah.
I don't know what he said, maybe if they're 50,000 to 100,000 followers or whatever. I'm not adept at that word. So he said, then those people, we tell them we'll incentivize you, you send that traffic, you promote these brands, but you buy it on us. Which seemed pretty interesting because they brought down, I don't know how scalable it is, but they brought down their CAC to nothing, which is fascinating for a business like any of our B2C businesses. How do you bring down your cost of customer acquisition to nothing? How scalable is that? Is that smart? Can you keep growing on that? So I think they're like that. A lot of interesting businesses people are trying to build. So I think it's all sectors for me. I don't think it's one or the other. You mentioned Spinny, and I was hearing about 2 used car companies yesterday. I definitely think EV is massive.
Yeah.
But where is the value chain in EV? I met an investor friend yesterday who's probably going to be here today, Ritesh from Stellaris, and he was telling me where the value chain on EV is. And I had no clue about it. So clearly I'm not the investor. I mean, it was quite fascinating to understand what happens to the battery later. And because most of these batteries have to be kind of, over time they'll degrade.
Yeah.
But the value in that EV thing is entirely away from what we would normally suspect. So I think the good old kind of maxim will be true, which is nothing great ever got done by snorkeling. You have to scuba dive. You have to get to the bottom of the ocean if you want to build a great business. So I think in that there'll be better businesses built in everything we are doing today, because people are just scratching the surface much more and going down to the bottom.
So scuba diving, what are you looking at?
I think the world is aging. There aren't enough people to look after them. Just like India did in IT services, we provided great engineering talent from this country to the world. I think we have an opportunity to disrupt healthcare.
Yeah, child care, geriatric care, I think these are all opportunities for India to look at. I'm going to take an extra minute because we didn't have the audio functional for a couple of minutes, so I am going to take the liberty of adding on a couple of minutes. Mukul, what are you looking at?
So actually pretty much in line with what Deep said, if you look at the domestic consumption story, there are opportunities to go deep in most verticals. Obviously, financial services is a big enabler for both consumers and businesses across the board. So fintech, so much has happened, but a lot more has to happen over the next few years, whether it is in terms of solving for experience, whether it is solving for access, both for businesses and consumers. And third, which is most exciting, is now we have these champions in SaaS who have built global businesses. Ashwini spoke about it, that now it's no more about offering a lower cost alternative. Now it's about building best in class products. Companies like Postman have shown the way.
Yeah.
So that is going to become a massive, massive opportunity. So we are very excited, not just in SaaS, Web3, about global companies and hopefully even consumer global companies getting built out of India for the world.
Well, that's the hope, and I think the cost arbitrage thing is clearly out of the window and has been out of the window for a while now, at least in some categories. I'm going to give each one of you wrap-up comments. If you were to write an investor note today, you wrote one which was very, very popular and went viral through the course of the pandemic, the Black Swan. If you had to write a note today, what would you title it? What would you say?
Wow. I think I would start with the fact that the tide is turning, and this is an opportunity for us to use the fact there is a lot of capital, both private and I think between all of us on the VC side, we've never raised as large funds as we have this year. And so for a Series A and a Series B founder, I would just want them to know that capital will not be the reason you will not succeed, and so take that away. And now it comes down to the fundamentals of, do you really have a strong product proposition, a massive market need that you are able to sort of get to market with? It's fundamentals. And put your head down, don't get distracted, play your own game, don't worry about who else is raising how much money, don't care about, what the valuations are, and get away from all these unicorn tags. Just put your head down and build a business daily. And I think if you do that, there is just a immense amount of capital, immense amount of people who would come join your bandwagon. So that would be the gist of my message.
Well, lots of people looking at hitching themselves to your bandwagon. Mohit, and I am very proud of the fact that we haven't mentioned unicorn even once on this panel in the last 45 minutes. Mukul, if you had to write a note, what would it say?
See, if we go back a few hundred years, we used to be a bird of gold, and at that time it was on the back of agriculture, it was on the back of natural resources. Given we are where we are today, I think we are very blessed. We have phenomenal talent. We have the most ambitious entrepreneurs in this country. We have a large domestic market. We have a large global market. We have capital providers. So everything is in place. I think we should overlook as an early stage founder the current macro, because these are the best times to build. And I'm very, very optimistic in our lifetimes we will be bird of gold again, and technology will play a big role. So that would be my message.
Deep, and I'm going to throw in one last question as well on the role and responsibility that founders, young entrepreneurs, middle-aged, old entrepreneurs can play in terms of giving back, bringing more women, making the workforce more inclusive, having a much more diverse ecosystem as well.
Yeah, and it's hard to add to, the investor notes, and they know it best, but I think it's the good old basics still. It's like understand your customer much better, solve real problems. I mean, not just like problems which you think in your mind, test them out a lot, that thesis. And if there's one overarching thing for me is build for the long run. I think, it's all over again. It's resilience in a different form, but definitely if you're going to build for short term, and I tell every young entrepreneur that, if you're building to flip out, if you're building to sell, chances of success are very poor. Just build for the long term. Many things will happen along the way. Opportunities will come if you build a good business, as simple as that. So, and take enough capital. And PS, India is still the best place to be, undoubtedly. So, not got it wrong. I would bet all the capital I have definitely on India. I won't go to any other. We don't need to go anywhere else, I think. But to your other point, absolutely. I don't think we've done a good job as an ecosystem. I don't know who's to blame of not enough women as entrepreneurs. And it starts from there or at the top. Corporate India, I think in some parts has done a reasonably good job. I think banking's done a great job.
Yeah.
Media's done a very good job for whatever reason. But we can only talk about entrepreneurial India. it hasn't happened. And it's kind of strange if you think about it. Why not? Because, I mean, and I love saying, you know, just look at Falguni and look at the business she's built with Nykaa. And we got her at Tycon last year to speak. It's such a solid, such a great business. But what is the best part of that business is how she built it.
Yeah.
She built it brick by brick. She took very little capital. And actually, most investors have admitted, including Ravi from Elevation, it was one of the things no one really saw coming and becoming such a fantastic business. So kudos to the investors who found her or convinced her to take their capital. But what a great business. And that was a woman who understood her segment deeply and continues to do that. Now her son and her daughter are both working in that business, which is so amazing if you think about it. We should have more. So I think we should talk about it more. I know the investors are consciously looking, but they're not going to say, I'm going to, you know, favor this. Just like what happens in hiring all the time. You know, I tell my CHRO all the time, why don't we have more women at the top? And he keeps saying, you know, the candidates are there, but we're not going to compromise. And why should we? I just think the ecosystem's not done enough to attract and to say you can manage this business and lead a balanced life and, you know, go on your personal journey as well. It's possible. It's probably better than a corporate life because you can do it on your own time. You'll still work much harder, but you have the flexibility. So I think we need you to evangelize it and all of us to actually talk about it.
I've been trying to evangelize that for 2 decades now on Young Turks. That's been a big part of the agenda.
Just 15 seconds. That's true. You have just 15 seconds. That point you made on governance. I can tell you there's data to prove governance and lady founders have a much higher correlation than otherwise. So, you know, if there's one more thing, it's just the way women are. They're just far more, I think, you know, likely to not get angry when the cop pulls them up and likely to say, yeah, I'm sorry, I was speeding. And yeah.
Well, Deep, Mukul and Mohit, many, many thanks for giving us a reality check of where things currently stand in India today, but more importantly, for also taking us through what you believe is going to be the future of the entrepreneurial ecosystem. There are many questions unanswered at this point in time, and we just don't have the ability to read what lies or what curveballs are going to come our way, but that's just the nature of the beast at this point in time. I think, as Seneca said, luck happens when preparation meets opportunity, and I think that is what the panel is trying to leave you here with today. Make decisions that are right for your company, for your organizations, not just in the short term, but in the long term, and hopefully you will emerge stronger through these volatile times. Thank you very much for being a great audience, ladies and gentlemen. Appreciate your time.
Thank you, Shereen. Shereen, can you present the token of appreciations? Guys, clearly a great session, clearly a divide between how entrepreneurs versus VCs think about the current market conditions. VCs think there are a lot of money, entrepreneurs are struggling to find that money. Thank you. So.